episode of the Millionaire Mentor Method podcast with me, your host, Krystal, also known as the most famous woman in the world. So today I want to talk about Jerome Powell's speech yesterday at the Fed and what it means to us in simple language. So the Fed raised interest rates another 0.25 percentage points, which means that the funds rate is now at 5 to 5.25%. And so what this means really is this was not surprising to anyone. And basically, this just means that the Federal Reserve is attempting to still slow down inflation because they are trying to get the inflation rate down to 2%. And so the good news about this is that the inflation rate in the United States has definitely been falling from its 2022 highs of above 8%. So now it's sitting somewhere just below 5%. But they are determined to get this inflation rate down to 2%. And so to make it very simple, all we have to think about is when the Fed was printing money and when all of these stimulus checks and EIDL loans and PPP loans and everything, when all of those things were coming out, the whole point of that was to stimulate the economy and get more economic transactions going, right? So if you give people what was essentially free money, of course, they're going to go out and spend it. They're going to go out and spend it, not just, of course, as consumers on things, on like household items, but businesses borrowed money at very low rates, meaning almost free. So they were basically given what essentially amounts to free money, and they spent that on things like equipment and hiring and expanding and scaling and all that good stuff. So it stimulates the economy to lower the federal funds rate, and the exact opposite happens when it is raised. So basically they put the gas on over the pandemic in order to try to stop a complete collapse, a complete apocalypse. And now they are putting the brakes. So that's pretty much what it is, gas and brakes. And so they're just putting a little bit more brakes on. It's nothing that anybody was surprised about, like I said before. And actually, so Jerome Powell also said something that I think is, well, you know what? I'm just going to give my real opinion. I think it's just a little bit wonky, which is he said that the banking system is sound and resilient. And any of us watching the headlines knows that there have been many scary headlines happening lately in the financial sector, which would definitely not suggest that the banking system is sound and resilient, considering that we're going through a worldwide banking crisis right now, which saw the collapse of 4 banks and what essentially is a bailout or buyout of Credit Suisse. So we're talking about Silvergate, SVB, Signature Bank, First Republic, and Credit Suisse. So to say it's sound and resilient is a very, very, interesting thing to say. Let's just say that much. But what does all this mean to us? Basically, it doesn't really change much. It's still the same, which is we're still battening down the hatches because we still are in a recession, and inflation, even though it is slowing down, it's still not down to 2%. So we have to remember that price stability is the goal and responsibility of the central bank. And that is what they're trying to do with this. So we shall see. They also want to keep the unemployment levels low, which right now they are lower than they've been in years, the unemployment rate. So this is interesting times, but my ideas about what's going on right now haven't really changed because of a 0.25 hike. And I'm going to leave it at that today. Please go to millionairementormethod.com join our free community, get the free newsletter. You can go to millionairementormethod.com/free tools to get my schedule actually that I use every day, a blank schedule that really helps me on a daily basis to keep track of my hour by hour time. I also put up my monthly goal tracker and a couple of other cool things. And until next time, remember, each one teach one.
The information provided in this podcast is for educational and entertainment purposes only and should not be construed as financial advice, investment advice, or medical advice. The host is not a financial advisor nor a medical doctor or licensed therapist. Any financial or medical decisions made based on the information in this podcast are made at the listener's own risk. It is recommended that listeners consult with licensed professionals such as CPAs, financial advisors, and licensed physicians before making any investment or medical decisions. The host and creators of this podcast accept no responsibility or liability for any loss or damages incurred as a result of the information provided in this podcast.